So you're thinking about maybe buying some Texas real estate? Well, if that's the case, welcome to my channel, which is all about helping real estate investors. In this video, I'm going to dive into DSCR and why this loan product has become so popular in Texas. And stick around to the end, I'm going to share with you a consumer guide I wrote to ensure you get the absolute best deal on your next mortgage. And we're going to get after it right now. If this is the first time to the channel and you want to know everything about DSCR loans, then subscribe below and tap the bell, so you can be one of the first people in Texas to know about the current market here in Austin and Central Texas, or around Texas. Hi, my name is Mark Harrison with Texas Mortgage Source, and I get calls and emails every day from investors just like you, looking to make and buy investment property here in Central Texas area, and I absolutely love it. So whether you're buying just 1 month or 1 year, give me a call or shoot me a text, send me an email, so we can explore the best loan programs for you. And as a mortgage broker since 1985, I've actually helped hundreds of investors around Texas, and I'd really love to help you as well. So if you've ever wondered how real estate investors are buying multiple properties without ever showing tax returns, this video is going to be for you. It's going to connect the dots. Today we're going to talk about DSCR loans, what I call 102, the real life side of these loans. I'm going to walk you through how they actually work in practice, share some Texas real estate investor stories, break down both the long-term and the short-term strategies that are working right here in 2026. And by the end of this, you're going to see exactly how everyday people, not Wall Street types, are building wealth through smart real estate financing. It's a quick recap from DSCR 101 that I did last week. It stands for debt service coverage ratio. Basically, can the property pay for itself? Lenders don't care about your W-2s, your tax returns, your business accounts, write-offs. They don't care about any of that. They care about whether the rent coming in on the property can cover the mortgage payment going out. And if it does, you're golden. All right, let's start with a story about a guy I worked with named Jason. Jason's a client of mine who I helped with a VA loan a couple years ago. He left the Army and started a small HVAC business right here in Round Rock. He wanted to start investing in real estate, but his accountant had written everything off under the sun. So on paper, it looked like Jason was making about 12 bucks a year, literally. He called me and said, "Hey Mark, I know I'm making good money, but there's no way I can get a mortgage." I said, "Well, actually there is. It's called a DSCR loan." A few years ago, he bought a rental property in Hutto, renting for around $2,300 a month. The total payment with taxes, insurance, and HOA came to about $2,100 a month. So that's a ratio of 1.09, which means the rent more than covered the mortgage payment. He put down 25%, bought the house in his LLC, and now collects a couple $100 a month every month in cash flow. Nothing flashy, just real steady. And the kicker is, 2 years later, the home had gone up $40,000 in value, and he was able to refinance it, pull out a little bit of cash, and do number two. That's the beauty of these loans. One door can open 2 doors, 3 doors down the road. So let's switch gears and talk about short-term rentals, because this is where DSCR loans really come interesting. Megan and Lewis bought one in San Antonio. They wanted to buy a small vacation rental near Canyon Lake. Traditional lenders didn't want to touch it because of short-term Airbnb. But with DSCR, we were able to get that project income based on comparable rentals in that zip code, and we were able to close. Their total mortgage payment was around $2,800 a month, and based on conservative estimates, the property was going to pull in between $35,000 and $4,000 in bookings. That's a ratio of 1.25, which is great numbers. They closed in about 30 days, and their first summer was booked solid. Even after property management fees and some cleaning fees, they cleared about $8,000 the first season. Now that's saving up for their next ones. That's a pretty good strategy. So let's break this down in the simplest possible way. If the rent divided by the payment is greater than 1, you're good. So let's say rent's $2,500, the payment's $2,300. That's a 1.11% DSCR positive cash flow. On the other hand, if the rent's $2,300 and the payment's $25, that's a 0.94. Not the end of the world. You can still get a loan, but a little bit more down payment and a little slight higher rate. Most lenders like to see a 1% or higher. That means the property pays for itself. I've got another great example, and this one's kind of fun. A friend of mine, a client now, named Chelsea, runs 3 Airbnbs in the Austin area. Several years ago, she bought the first one with a DSCR loan. At the time, she was working as a yoga instructor and didn't really have a whole lot of income, but she did have some money she'd inherited from her parents. Her projected rent was around $5,000 and her payment was around $4,200. She used that deal to prove her model worked and then leveraged the equity to buy 2 more Airbnbs, one in the Lakeway area and one in Wimberley. And now she makes more income from her properties than she ever did from teaching yoga. And it all started with just one DSCR loan about 5 years ago. Here's what I want to tell every investor. The biggest shift isn't financial, it's mental. You don't have to be rich to start. You just have to think like a lender. So when I evaluate deals now, I don't ask, hey, can I afford this? I ask, can the property afford itself? That's what this mindset's all about. It changes how you see opportunities. You start looking for properties that cash flow instead of hoping for appreciation per se. And that saves the day. Now let's keep it real. DSCR loans aren't magic. There are a few things to watch for, and there's some pros and cons. First of all, don't overestimate your rent. Be conservative. Base it on real data, not hope for the future. Always factor in property management fees, maintenance costs, and taxes. And make sure you've got some reserves. Lenders like to see that you have 3 to 6 months reserved in the bank after closing. It could be a 401k or cash and savings, anything like that. You can absolutely make these deals work, but just don't rush into one blind. The smart investors run the numbers first and let the math make the decision. This is not an emotional decision, this is by the numbers. And one last story before we wrap up. A client of mine, let's call him Robert, he now owns 8 rental properties around the Dallas-Fort Worth area. He started with just one loan back in 2019. And every year he used the equity and appreciation from one property to buy the next. He never showed tax returns. He never had a W-2. He just keeps finding cash flow properties in that area, sometimes foreclosures, where the rent will now cover the payment. And last year his portfolio cash flowed over $10,000 a month, and he told me, he said, Mark, the crazy part is I never thought I could do this. I just follow the math. And that's what the DSCR story is in a nutshell. It's not about hype or luck. It's about consistent, repeatable math. So here you go. DSCR Loans 102, real stories, real numbers, and a simple strategy for wealth building, one property at a time. So whether you're doing long-term rentals, short-term rentals in Round Rock, or weekend getaways near Canyon Lake, the formula is always the same. Find the properties that pay for themselves and let the cash flow do all the talking. So if you found this video helpful, give the video a like, hit subscribe for weekly content, sometimes on VA loans and sometimes on DSCR loans, and share it with someone who needs to hear this. And hey, before you go, I want to give you something that can really help you. If you're shopping for a mortgage or you're planning to soon, I've put together a simple, very easy to read consumer guide called The Truth in Lending. It breaks down exactly how lenders price loans, how to compare quotes the right way, what fees actually matter and ones you can negotiate, and how to avoid getting overcharged. There's no fluff, there's no jargon, just 40 years experience sharing this information. Just the stuff I wish every buyer knew before starting shopping for a loan. And because you've watched this video all the way to the end, I'm going to give it to you for free. Just comment your email below and I'll get it to you out ASAP. Use a kind of a cheat sheet anytime you're comparing lenders, which I recommend you do, or trying to make sense of rates and fees. I've been doing this over 40 years, and this guide, I promise you, will save you time, money, and a whole lot of stress. So if you want the truth, the real truth about how to shop for the best mortgage rates for you, go get a free copy now. Enjoy it. If you have any questions, you know where to find me.